five. Let me put it like that. Welcome to day five. This is now like the fifth day and the last class. This is the most important section, trust me. That's the most important section out of everything we have been talking from the very beginning to now. This is the most important section because if you miss this, this is where profitability is in trading. This is exactly where profitability is in trading. So you don't have to miss this one for anything. Take your notes, write down something for this one, write down something for this session, because this is the very most important session, because you can actually understand how to do highs and low. You can understand how to like enter your trade, but if you miss this exact one, you will still not be profitable. Just take that from me for free. Just take that from me for free. You will still not be profitable. The exact thing that make you profitable is what we want to talk about now. So we start wasting much of your time. Okay, wait. Let's invite Coach Claire. Coach Claire, the floor is yours.
Thank you so much, Coach Samson, for the last session. It was really insightful, straight to the point, and brilliant. I hope we all got something from it. I understand that we've spent some time, even though we've gotten so much value from it. I would want us to be brief this session so that we can let's just be brief this session. I think it's really important, right? So that we can go to bed early tonight. So we'll get started. And the first thing I'll be talking about is risk management. Oh my God, risk management, risk management, risk management. Can somebody type risk management in the chat so that I'll be sure that I'm not talking to robots? Can somebody type risk management in the chat? I like the abbreviation. Thank you, Mesoma. So let me know when you can see my screen. This is a presentation I made. This is something I love to use when I'm talking about risk management. And I'm just going to run through it. And I'm also going to send a very detailed video on risk management after this class. So this will just be like a brief version of it because of time. So risk management in trading. What is risk management? Risk management is basically like the practice of protecting your capital by limiting your losses and maximizing your gains. So it's everything you do in trading to make sure that your capital is protected and you're having more gains in the markets, your losses are limited, and at the end of the year, at the end of the month, you're profitable, right? There are people that trade, they make a lot of money in one day, a whole lot, trust me. But the next day, they lose times two. And that's where transparency comes in trading because somebody can show you the account balance today, but if that person doesn't implement risk management, they can show you that they made like maybe $7,000 today and they'll show you it's real, they have the money, but the next day, they might actually lose more than that because they don't understand the full concept of risk management or they are not implementing it. So this is something I wish I implemented from day one. I'll be honest with you, but but then when I started implementing it, it gave me so much peace of mind. It gave me so much flexibility in trading, and it helped me grow my capital as opposed to making money today and losing it tomorrow. I'm able to grow my capital over time, if that makes sense. So this is something I wish I started implementing from day one. I wish I fully understood it and I started implementing it from day one. So if you ask me, I think you should start implementing this with the lessons from this class. Of course, after this class, we'll be providing personalized guide. Like we'll hold your hand one on one for those that will be joining us on that journey. We'll hold your hand one on one to help you implement the best lessons that has helped us move to profitability in trading. Like it won't be a general group, something where you can send us your reports in the DMs. We can provide feedback. We can make sure that you're trading every day and giving you feedback based on what you're learning. So stay tuned. We'll be sharing that gift at the end of this class. Basically, risk management is beyond 0.01 per $100 account. I saw in the chat, whether yesterday or so, someone asked if what lot size should I use for $10,000 account, and somebody graciously replied, use I think it's lot size 100. That is 100. 1.0 lot size and still blow your account, right? You can use the correct lot size and still blow your account if you don't understand the full concept of risk management. So if somebody tells you, oh, I have $100 account, what lot size should I use? On a normal day, the response is
Are you the
usually
bloody whistle?
use 0.01. But if I should ask people that have been trading, have you ever had $100 in your account? Have you ever used 0.01? Have you ever blown that account? People that have been trading without risk management, the answer is yes. Because risk management is beyond knowing the lot size to use per account, is understanding the full concept of it. And that's what I'll be teaching you tonight. So the full concept involves three things, which is risk knowledge. Hope you guys can see my screen though. I just want to confirm that.
Yes, yes, you can.
Oh, okay. Good, 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 good. So, let me continue. So it involves risk knowledge, risk acceptance, and aiming times two. Risk knowledge is knowing your risks before you enter a trade, right? You can use 0.01 and not know your risks before entering that trade, and that would actually blow your account because you don't exactly know how much you're risking. You just know you're using 0.01. And if your stop loss is like very far, very, very far, more than $100 worth of stop loss, and the market didn't go in your favor, you might eventually blow the account. But if you know your risks and you're okay with that risks, you'll be able to know that, oh, I can only risk $10 in this account. And you know that it is, and you set your stop loss for that $10, and you go to bed peacefully knowing that, okay, I knew that I want to risk this, and that's what I'm doing, if that makes sense. So you need to know your risks on every trade you take. Like every trade you take, you must know the exact amount you are risking on that trade, right? Don't just take trades because you probably saw a signal somewhere or because you just felt like tapping enter, 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 enter like fire. No, you should be able to know the risks per trade. And one of the ways I use, I think I would just make this better by joining with my phone and showing you how I do that with MT5. But from this screen, the fastest way you can use to know your risks is by using limit orders, right? Instead of just entering directly, you set limit orders. You'll be able to know exactly how much you're risking. I think when I talked about MT5, I showed how to set limit orders on your phone. But for the purpose of those who might have not joined that first class, I'll quickly show that using my phone. Give me a moment. Let me join with my phone, please. Okay. I think I'm. I think I've joined with my phone. Is it echoing on your side?
No,
Who said it's echoing?
it's okay. It's okay.
Okay. Good. 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 Um. I just want to be sure. Okay. We're good. Let me try and share my screen with this phone. Okay.
Need generator noise come loud today.
Okay. Just focus on the phone
And
screen,
be all
not
these days, they need your
the.
own.
So this is MT5 here. Okay. So if you can see this circle at the top, let me see. This circle at the top, you see the circle that this red line is pointing at, that is red and blue. Good. Just take note of that. Let
The
me
first or the
speed it up.
second?
The first one, the one that is circle. So once I click on it, that circle,
The first by
I'm
your
going
right
to.
or the first by your left?
Okay, let me point it again.
I think we have talked about this on the MT5 video. If you watch it, you should understand how to take limit order.
Let's just do it for the purpose of those that are journalists. Can you see this first one on the left? The circle, not the square, the circle that is red and blue. Can you see it now? I'm pointing up to it. Good. That's just what I use. So if you click on it, if you click on that circle, you're going to see buy limit at the bottom. At the bottom here, you can see that buy limit SL and TP popped up at the bottom. So if I use that, I'll be able to know where exactly I want to enter from. Let's say I want to sell this market from up. If I carry it up, it changes to sell. If it's down, it changes to buy. So up is sell. So if I want to sell this market now, and then my SL is up, let's say my SL is up. Can you see 13 beside SL? Can we see 14.59 beside SL? Can we see that 14.59 beside SL? That red line by the left. Can you see 14.59? Yes, thank you. So for
Yes.
TP, if I click on TP and I see 70, can you see 70 beside TP? Yes, good. So I know that this trade, if I take this trade, my risk is $14 and the profit I'll make from this trade if it goes in my favor is $70. As simple as that. So if I'm okay with risking $14, I'll go to bed knowing that oh it's $14 I'm risking. Then I can click on the blue arrow beside TP at the bottom. There's sell limit, there's SL, there's TP, then there's a blue arrow at the bottom. So if I click on it and I click on place order, it's going to place the order, right? But the market is closed. So I just wanted to use my phone to buttress that fact that that's the fastest way I've found so far to know your risks in the financial market. So let's get back to this chart. So now you can see on this trade, the SL is $60 and the take profit is what? Let me be sure that we're following. Can somebody type how much I'll make on this trade in the comment section? Can somebody type that? Good, good, very exact. Is it just Mesoma that is in this chat? Is it just Mesoma that is following? I can see over 15 people so are here. So is it just Mesoma? Who else can tell me the profit? Okay, somebody else tell me the stop loss, the risks on this trade. Can somebody else tell me the risks on this trade? Fast, fast, please, 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 please. Let's be fast. Should I start calling names? It's good. Bricks minus 60. Right? It's always good to answer questions in class so that if you're wrong, you learn. If you're right, you build your confidence. So this is a very good way and the fastest way I've found to know your risks. And it's really important to know how much you're risking on a trade. There are people with time you get used to it. You get used to the numbers. You might not even need to use SL. You might not need to use this limit orders, this method I showed you. You might just enter automatically because it's already in your head. You know that oh 1 pip, 2 pip, you already know your pip calculation, you just enter and it's good. But for beginners, just stick to this so that you don't end up risking more than you intended to. So the next thing, important thing in risk management is okay, this is a test, but I think we already did the test, so I'll just skip it. This is a test to know if you know the risks in this trade or not. Okay. Sorry, my network is a bit slow. So the next thing is risk acceptance. Basically, what risk acceptance is accepting your risks once you enter a trade. You don't need to pray the market to do what it wants to do because if you are praying, somebody that is buying is praying. If you are selling, someone that is buying is praying. Who will God answer their prayers, right? So you just need to accept your risk so that you will not be panting like this man walking left, right because you entered the trade. You don't need that. Your trade should be peaceful, right? So if you know that you're okay with risking $10 to make $70, you set your stop loss, set your take profit, and you go to bed peacefully. That's the importance of risk acceptance. And then aim times two, aim 2x or more. So it's basically just common sense. If I tell you that, oh, give me 15 naira, I'll give you 15 naira back in 2 years, or I might not give you the money back, will you give me? Or if I say, give me 500,000 naira, I might give you 250,000 naira or nothing. Would you give me? So you will never be willing to borrow somebody more money than they are willing to pay you back. Therefore, in trading, you should never be willing to give the market more money than the market is willing to give you back, if that makes sense. So your stop loss is not psychologically right. It's not mentally right. There are people that do it, but the side effect is they might win so many trades, but the day they lose, they blow their accounts. Why would you put yourself through that emotional stress? Like you might be winning, 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 sending screenshots, but the day you lose, just you and your God will know, because you know that you blew all your week's efforts. So it's not psychologically right, and I don't advise it if you want to have a peaceful trading experience to risk more than you're willing to get from the market. Once you set your take profit, I saw somebody do that in, I don't know if she's here. Let me check if she's here. That's the importance of sending your trades. We're able to give you feedback here. I don't know if she's here. She's not here. She's not here. I wish she was here to learn. Anyways, she sent her trade, and then we saw that the loss was around $3, and then the profit was 0 point something cents. And I was like, why? Why? It's not making sense. It's better for you to keep losing, and your profit is times two. The day you make profit, you make back all your losses and even more. You make back all your losses and even more. But if you're closing trades too early because of fear, you will keep losing, 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 losing. And in your mind, oh, I'm making money, I'm making money, you're making sense. And the day you will lose, you lose all your cents plus your capital. So the best thing, the best thing to do, know your risks. One, set your profit targets to times two, and then don't even close the trade. Just off your phone, set app limits if you have to. Keep your phone away. Go and play football if you're a boy. Go and watch movie if you're a girl. Go and make your hair. Go and do something with your life. I mean, trading is not supposed to be your entire life. Trading is like a skill. It's kind of a side hustle. You can have a full-time job. You can have, what's it called now? You can have a life. You can have you can be a full-time student. All you need to do is, I showed you how to enter the trade. It doesn't take up to 2 minutes. Enter the trade early, because it's in the long term it affects you, if that makes sense. So never be willing to take profits at something that is less than 2 times your weeks, so that when you lose, your losses would never be more than your gains. This is very important. If you practice it, you have long-term profit in the market, you have peace of mind, and you trade like the big boys do, because there's no strategy that guarantees you 100% win. No strategy. Take that from me for free. No strategy guarantees you 100% win. But if you're able to manage your risks properly, knowing your risks, aiming for times two, you would stay in the market longer. You have money, you always have money to trade. And in the long term, at the end of a year, 2 years, you'll be a baller, if that makes sense. So let's say you you lose 6 trades and you're always aiming for times two. You lose 6 trades and your risk is $10. If you lose 6 trades, how much have you lost? $60. If you win just 4 trades and those 4 trades are aiming times two, how much have you won? $80. You still have a profit of $20, which is 2 times more, which is still more profit, even though you've lost more trades than you've won. If you're aiming for times three, if you lose 7 trades out of 10, you've lost $70. If you win 3 trades, you've won $90. 3 times 30 that you won is $90. So even if you win 3 trades out of 10 and your risk is always times two or more, you would be a profitable trader compared to someone that wins 10 trades in a row but make one losses and loses everything. He blows his account. There's no point in trading like that. It's not sustainable long term. Looking at this trade, can you tell me why the first one is wrong and the second one is right? Quickly in the chat box. This is very important. That's why I'm trying to even take it slow. Can you tell me why the first one is wrong and the second one is right? Anyone? Let me be sure that we are following. I like to ask questions. Can anybody tell me why the first trade is wrong and the second trade is right? Have I been speaking Spanish? Have I been speaking French? Excusez-moi. Je ne comprends pas. Was that what I was saying? Not true. Okay, thank you, Miss Oma. Thank you for letting me know that I've been speaking English. Thank you, thank you. So, Mesova is the only person that understands this English I've been speaking. Good. I'm sharing my screen. Oh, I'm sharing my screen. I'm sharing with my laptop. I can't even see it on my other phone. I'm sharing my screen. Maybe you need to rejoin a journal. So,
I think
Mesoma
you need
said
to
the
go out
SL
and
on.
join again.
Yeah, I'm sharing my screen. Mesoma said the SL on the other one is too much. Exactly, that's why it's wrong. If your stop loss is very far and a lot, it's not sustainable. But for the first one, but for the second one, the stop loss is small. The person is just risking $10 to make $30. The other one, the person is risking $70 to make $6. Person is a clown, risking $70 to make $6. And this person will post this trade as, oh, I made money today, $6, good for you. But we know that the day that this person loses all their accounts, all their profits and more. So it's not sustainable long term to be trading, closing your trades early before they mature, or risking too much more than you are willing to risk. And the second trade is wrong because the stop loss is $70, the profit is just $6. And the second trade is right because the stop loss is just $10 and the profit is $30. In risk management, the second trade is right. So rounding up risk management, these are the key points I want you to remember. So these are the key points I want you to remember. I'm going to send a video that explains this in depth so that you can take notes.
You can take a
So the
screenshot
first
of
thing,
it.
yes, the importance of good risks and the negative side of bad risks. Basically, what I've said, for bad risks, you have to be right all the time because if you're ever wrong, your profit is all gone. For good risks, you have to be right less than half the time. Like I showed you, if you are risking $10 to make $20, if you lose six trades, you've just lost six times 10, that's $60. If you win four trades, you've won $80. Four times two, that's $80. So you just have to be right less than half the time if you're using this good risk management that I taught you today. For bad risks, one bad trade takes all your profits, takes even your capital. For good risks, one good trade recovers all your losses and gives you more for good risks. For bad risks, every day accounts blown. There are people that literally blow their accounts every day, every single day. For good risks, your account grows over time. And for bad risks, heartbreaks, no peace of mind. You're trading, you can't do anything else. You're just watching your screen because you know that if the trade reverses, it's all gone. For good risks, you have peace of mind. You trade, but you have a life. I trade and I do a whole lot of things other than that. I'm an author, I write, I work as a digital marketing expert. If I don't trade, I'll be fine, to be honest with you. So it gives you peace of mind when you have proper risk management. So before we go on to the other segment of this class, which is the most important and final session to round up everything we've been teaching you for the past 5 days and to give you a gift at the end of it. My goal is to finish this class by 10 at most, just 30 minutes away. Thank you guys for staying tuned. Do you have any questions so far? I think Mesoma says she has a question. Go ahead and ask Mesoma. Oh, sorry. I did not know. I'm so sorry. I don't think I've met a guy named Mesoma. So that's why I thought you were a girl. I'm so sorry, sir. Pardon my manners. Something about closing trades too early. Yeah? What's the question? Closing trades too early before they have the opportunity to give you your times two of what you were risking. So let's say I was risking $10 and immediately I saw $1 I'm closing. It might make sense to me now, oh, I'm in profit, it's all blues. But over the long run, it's detrimental to my accounts because let's say I make a mistake and I lose a trade and I've just been making $1, $1, $1. When I lose that trade, I lose the whole $10. Like I lose everything. Do you understand? So it's better to wait for your trade to reach times two or more before closing. You have a question for the previous class? Yes. Coach Sampson, this is for you. What if while running your analysis, you notice something else while in the trade that counters your strategy? Is it advisable to close the trade early based on that? I think this is a very good question. You've been following. Coach Sampson, I think this is for you.
This is a very deep one. This is a very deep one. Okay, let me say for instance, like I said, I trade according to the market structure. What's the structure of the market? So because I can see from the higher time frame that the structure is bearish, so me coming down to 1 minute before the market structure will change and go to bullish, it will take like 1 hour, 2 hours, 3 hours, 4 hours. So definitely then my TP has eaten or my stop loss have eaten. So definitely there will always be a loss. But the moment I do my analysis and I've taken my trade, I'm done for the day now. I've taken the trade already. Is it that stop loss or TP? That's it. But if I do my analysis and I take my trade and the thing start giving me profit, why there I now notice a shift in the structure. That is the thing want to go up and hit stop loss. And I am still looking at that chart. That is I've not left my phone. I'm still looking at that chart. I don't mind closing that trade on that half and go. But most times it will always be rare for this shift to happen. The market might likely be doing as if it's going up back. It's just going up to tap into the next break of structure and come down back and continue the bearish move. That is why I look at what is the shift of the market. I don't just look at what is the market. I look at what's the shift of the market. If the shift of the market selling, then let me sell on the 1 minute time frame. 1 minute time frame is just a drop on 4 hours. So you need to understand my own psychology part. I just hope I answer your question.
So, okay, thank you so much. To add to what Coach Sampson have said, let me just try and share my screen and show you like some of the trades I had on this week. And from my experience, so I would say, so I'll tell you real life. So this is a trade I took on Euro USD. This one in the middle. So if you can see,
Your
the
screen is
trade
not showing
starts
yet.
with
Your screen is not showing yet. Okay, it's showing now.
what about now?
It's showing now.
Okay, as you can see, the trade took time. So I entered when the market was here. I was entering from I think this order block here. So the market left me fine and good. Then the market came back, tapped me in, and I was like, oh, this is not my trading time. It tapped me in around, let's check the time. I think it was around 8 in the night. So I was like, I am not going to hold this trade anymore because it tapped me in late. So I closed, and guess what? The market came to 1 is to 2. Let me show you. So the market did 1 is to 2, which is I would have made a whole lot of money if I had stayed in the market. Why I already closed because I was my empty 5 and go to sleep. But then I was watching the trade and it was during this bullish candle here, it was going up. I was like, this is going to take me out. Let me just close. As I closed, the market dropped and hit full TP 1 is to 2. So what would I say? What I think I'm doing right now, what I would advise is once I feel like once you've taken a trade, you've taken it. That's just it. Is either stop loss or take profit. Because sometimes you might have in mind, like what I just showed you, you might have in mind that the market is doing the opposite, the market is not going in your favor. But that's just a psychology thing because you're watching the trade and you're seeing something else at that point, which you shouldn't be seeing. You should close your MT5, if that makes sense. But in that trade, I was targeting 1 to 3, but I'm fine with 1 to 5. So I would say that just forget the trade once you've entered, forget it, come back later. And if it's more than 1 to 2 and you're fine with it, you can take partial step. Isn't that closing before TP? TP is, how do I put this now? So you can be on a trade and have two TPs. The first TP 1 to 2, the second TP 1 to 3, the third TP infinity. Do you get? So it's not a do or die issue where you have, oh, this trade must be 1 to 4, this trade must be 1 to 5. Do you get? So you might have your rule that once it's above 1 to 2, I'm fine, or once it's 1 to 3, I'm taking half of it. So if you're risking 1,000, let's say $100 to make $300, and it's 1 to 3, you're saying, okay, I want to take 50% of the trade, that is $150, and then leave the rest to run. So if the rest runs to 1:5, you're okay with it. Okay, I'm glad you understand now. But we'll be teaching this in the full package we'll be offering. So let me quickly run you guys through it. For those that will be joining, we'll be teaching you in full, and then we'll be watching your trades with you. We're not giving you signals, we don't do that. How you to trade by yourself.